Thank you, Lascan Corla. First of all, can I say I welcome the legislation, and I want to wish Minister Jennifer Carroll McNeill well in her new role, and the very best in guiding this really important piece of legislation through the Oireachtas. I'm not sure if it's your first bill, Minister, but one way or the other, I wish you well. And I have to say as well, I want to say that I hope you will be open to at least listening to some of the arguments put forward around amendments, changes and perhaps improvements to the bill. But in saying that, I recognise all the hard work and the widespread consultation that has taken place up to now, and I commend Minister Fleming, his officials and all the stakeholders for this, because it is a very significant piece of work. But going back to what I said at the beginning about possible amendments and changes to this bill, as I said, I do hope we can have an open and constructive dialogue, and I think listening to all of the speakers, government and opposition, in this debate, I think there's very much a good framework for that there. So we all have a common objective: to ensure optimum delivery of financial services and choice for Irish people through their credit unions. I think that's the central issue and the central point that we have to keep in mind always. And I think in order for this to happen, credit unions have to have a proportionate regulatory framework which recognises their specificities, the fact that they're member-owned, not-for-profit, volunteer-led and embedded in their community. And that is now allied to strong governance systems and a proportionate regulatory framework that ensures financial probity, financial stability and also the opportunity for growth and expansion. I think, Minister, that's what we need to be looking for. And furthermore, I think many people have said this, credit unions provide a bit more competition in the market, especially with the exit of KBC and Ulster Bank. The CV of the credit unions of the movement is very impressive. We have 280 different credit unions with over 3.5 million members. Their assets are worth well over 20 billion, about 22 billion, with 17 billion in savings and about 5.5 billion in loans. And crucially, Minister, they provide more personal unsecured loans than any other financial institution in Ireland. And that tells you something. They're the people's bank, that people come first and everybody is welcome in their local credit union. And while there are about 280 different credit unions, they are present in approximately 500 locations. So that's a widespread presence, and I think it's testimony to the faith that people have in their local credit unions, and that's more locations than all three pillar banks together. Now, that faith has been, and trust, has been hard won and is managed every single day by the provision of a service that is both digitally efficient and personal. And the personal is not just about the availability to customers, because that matters a great deal. People like to speak to other people, especially when it comes to their financial affairs, because it's not just a case of pressing a button and €100 or €200. People want a bit of advice, sometimes a bit of reassurance, and credit unions provide that very much. So the personal contact that they provide informs the ethos of how they deal with their customers. And many, many people really appreciate that. Sometimes people refer to, well, older people who aren't digitally literate need this. Let me tell you, when it comes to financial affairs, I think we all need it. Now, I always say that if we didn't have credit unions, we'd want to invent them, but we do have them, because all across the country, individuals and communities, volunteers have come together and recognised that credit unions play a vital role in financially supporting their local community, and not just in providing financial services, but also in supporting so many community activities, from local sports club to Active Age, from festivals to community infrastructure, from the very large to the very small. In fact, I heard Deputy Robert Troy speak yesterday about the fact that they sponsored the FLA in Mullingar. So what we see is that their support is embedded through the community. And one of my great privileges from my time as a member in the European Parliament, where I represented at one point 15 counties, was the opportunity I had to visit so many credit unions in different counties across Ireland and to see at first hand how they operated and the challenges they faced, but crucially how they contributed to their local community. I can remember Clones and Monaghan, Donegal Town, Jarlath, St Tuam, Ballinasloe, even Limerick City, and of course my great friends in Chapter 15 in the Midlands. Now, I'm not leaving out all the credit unions in my own constituency. I'm not going to name them. There's too many. But the point I want to make in all of that is that they have a presence all over Ireland, where they work quietly but assiduously to support their local communities and, of course, their members. So that's the context in which we discuss this legislation, and that's why we must always remember how vital credit unions are to the 3.6 million people who use them and often rely on them, and also to the communities they support. Now, the other context, Minister, of course, is your own programme for government, which includes some very specific commitments to enable the credit union to grow as a key provider of community banking in the country. You also commit to reviewing their policy framework within which they operate and to enable and support credit unions in their expansion of services. And the government has followed up from that by appointing a junior minister with responsibility for credit unions. So all of that paints a very positive picture. And I think, that's the context. But when we're looking at legislation and when we're looking at regulation, we have to view the credit unions through the prism, as I said before, that they're member-owned, not-for-profit, and that they serve their communities. And finally, just before I deal with some of the detail of the legislation, I just want to make one brief point, and I suppose this is from my own experience over a number of years. After the financial crash in 2008, regulation in Ireland and elsewhere came down very heavy on financial institutions, and that was right. But in Ireland in particular, the regulatory regime imposed on credit unions was completely disproportionate to the risk that they posed to our financial system. The banks cost us 46 billion and counting, and made beggars of us as we waited month after month for the IMF and the EU Commission to arrive on our shores and rein us in. But the credit unions, with the exception of a very, very few, they all remained solvent and continued to support their members. Now, at this point, Minister, I'm not precisely sure, but my understanding is that any costs for bailouts, and as I said, they were few, were borne largely by the contingency funds the credit unions had in place. Yet, the regulator, if you go back and look at this, the central bank used a sledgehammer to crack a nut and imposed disproportionate regulation on the credit unions. Many of your own government colleagues have already alluded to this in the debate yesterday and a little in the Shannon, and I will come back to that later. But I do want to say, Minister, finally on this point, that overhang of disproportionate legislation, some of it is still there. And while I know you're not all-powerful, nonetheless, I really would like to see some movement on this. And while we should not forget lessons learned, because that's important, we should also be prepared to accept that legislation put in place at a particular time may need to be changed or modified to better suit current and future circumstances. So, Minister, I would really appreciate if you would just keep that in mind, as an overall in your role as Minister for Credit Unions. Now, looking at the bill itself, the bill is broadly welcomed right across this House because many of its proposals do really contribute to the strengthening of the ability of credit unions to provide a wider range of services to their members. And this is an important piece of what I would call enhancing legislation. Now, just to look at some of the details of the bill. It allows credit unions to refer lending business to each other and to participate in loans to other credit unions. Now, this is a positive move, but it is constrained, Minister. If a credit union does not provide a service in the first place, then it can refer a member to another credit union to avail of that service, let's say a mortgage. But if a credit union, let's say, has about 75 million in assets, which is a decent size for a credit union, because of regulatory limits in place, and I'm not discussing that aspect of it, but because of those limits, the credit union might only be able to do 30 mortgages. Now, that's not 30 mortgages a year, that's 30 mortgages in total. But in that circumstance, it could not refer that member to another credit union when it has reached its limit of 30 mortgages. Now, Minister, I know the common bond is a really core aspect of credit unions, and we need to maintain that. But I believe that this warrants further discussion. It's highly restrictive, and I suppose the question we have to ask is, what purpose does it serve? Who does it benefit? And the question always has to be, from my perspective, and I'm sure it is from yours, does it benefit credit union members? Obviously, within the constraints of financial probity and all of that. The retail banking review speaks about a full service to members. So, Minister, I'm not sure that this restriction facilitates that. So, another look, perhaps. The legislative basis to increase monthly maximum interest rates from 1% to 2% on credit union loans, I think, is appropriate. To some people it mightn't sound great, but what it does is it allows credit unions to price in risk for unsecured loans, especially for people who would have no chance of getting a loan in a bank and would otherwise go to money lenders who charge extortionate rents. It's a fine balance, but we need to find a way for people who cannot go to a bank because the bank is not interested in their business to be able to get an unsecured loan without having to go to a money lender. So that's a positive step. And I think that's one of the core functions of credit unions, providing services to those whose needs, as I said, will never be met by a bank. Now, Minister, even though it's not covered in this legislation, I am asking that as a follow-on from this bill, that you look at the issue of capital reserves, and many TDs have raised that issue here. The pillar banks, I think, are around 3%, maybe more. I'm not sure, you know more about this than I do, but credit unions are around 10%, much higher than in other countries. And the issue here, Minister, is not just the amount of the capital reserve, it's this. If a credit union has an unsecured loan to a member, or if a credit union has a bond with the Irish government, there is still a 10% capital reserve on both transactions. And that's more the issue. Now, of course, the 10% is very high, but it's more how proportionate it is that you can't lump all of that business into one pot, as it were. I'm not sure how you can manage it, but there should be a differentiation based on the type of assets that the credit union holds. Because we know all credit unions have risk compliance, All credit unions have internal audits, and all credit unions have strong governance structures in place. So taking that into consideration, I do believe looking at their assets when you're deciding on the amount of capital reserves is something that we should look at again. Liquidity is another issue, another regulatory issue, which perhaps also needs to be looked at. For example, if a credit union has up to 20% of its loans, maybe let's say 16%, over 5 years, it has to have 20% liquidity of unattached savings. But if they go over the 20 to 21% loans for over 5 years, then they have to have liquidity of 30% of unattached savings. That, Minister, that's completely out of sync with banking requirements, and especially in the fact that credit union savings are growing. Again, while it's not directly involved in this bill, it is something I hope you will get round to in your term as Minister and look at and tease out and thrash out with the credit unions themselves and, of course, the central bank. Minister, talking about the central bank, can I say I welcome the central bank engagement protocol. That is really important. But I think what's perhaps even more important is the stakeholder engagement meetings, where obviously stakeholders, Department of Finance and yourself, Minister, can attend. And if you'll forgive me for saying so, I think it's really important that your attendance at those meetings, where possible, happens, because I think then you will understand the nuts and the bolts and the workings in a way certainly I never would. And I think that forum is really positive. So I believe your role here can be very valuable. I'm very supportive of the idea of corporate credit unions, which give flexibility to credit unions in their work. They pool resources. It's like a credit union for credit unions. And I believe that any regulations that follow from this bill, and I think there may be some, I think should support that proposal. Enhanced governance measures are to be welcome, Minister. It's great to see them because, again, I mentioned about the crash. After the crash, there was just incredible pressure put on volunteer board members, and some of it was completely unacceptable. And part of the problem was that people just said, this is too much, we can't do this. Proportion is everything in this case. So the enhanced government measures that are in place, and some changes have happened in that area, which I welcome. So this is good to see. I also support that we can alter the scope of permitted investments by credit unions where they are able to invest in an entity, because I believe this helps support delivery of services to credit unions, which then delivers those services to members. Finally, Minister, a quick comment about credit union levies. I think they cost around 25 million per annum for credit unions. And I just want to ask you, are these proportionate? I'm not asking, Minister, actually, that you abolish them. They have a role. But I would ask that in the very near future, you might review them, please. Thank you.